Hi everyone, welcome to another episode of Bitcoin Intelligence Report. Today, Wizard and I are going to discuss our latest piece that was published and distributed on Monday about markets status. So if you have been following our writings on our platform, you've been seeing that we've been tracking what happens with the economy and on-chain developments. Pretty happy with how the market has responded, economic events relative to what we expected. So our last piece was titled "Panic is Coming" because we expected this time to be the beginning of a flurry of bad economic news. And then we are just seeing one example of it. Today, GDP data was released. US economy contracted for the first time in 3 years. And our piece basically was trying to prepare the audience for this outcome and saying there will be a lot of negative news, especially when a lot of the effects of tariffs are still not seen, not reflected in the data yet. So there will be a lot more bad news, but markets are always forward looking. So if economy weakens, that doesn't necessarily mean the market will crash hard. And so that's what we are trying to understand, where Bitcoin sits in all this chaos. And Wizard's focus on-chain data is very, very helpful here to help us have an X-ray vision into what's happening in Bitcoin. And we layer on top of this macroeconomics and macro events to give a full picture. All right, so let's see. This is a chart that you guys probably have seen many times, trying to value Bitcoin along its trend. I've made some improvements to the looks. If you don't see any difference, it has taken 6 hours for these little changes. So basically, this is showing that our risk score is 57% at the price of $95,000, essentially showing that if you look at the full distribution of prices here, we are 57% along the way towards the top. And do we have a closer one? Yes. If you zoom in, this is where we are in the green zone, and that's kind of like same valuation as we had, say, for example, in 2021 or late 2020. Valuation wise, that's the same. What happens next is unknown, probably driven by macro events, right? So whether we will exactly follow last cycle or not, it will all depend on what happens with macro, which is what we will discuss as well. But overall, for a long-term investment, this is still a really good risk reward for a long-term investor. But over the short term, there's a lot of volatility that's still coming because as the market reacts to all that negative news. So this is our write-up, Bitcoin Intelligence Report. If you are not looking at this, definitely check it out. This is where to go, 21stcapital.com/BI, and then you'll find the link to our platform, Bitcoin Intelligence, which has some charts, some of my models, the quantile model that we just saw here, and then our writings. So the last piece is looking at, again, like many of the previous pieces, looking at a combination of macro and on-chain data. So first, we begin discussing macro developments, and we warn about what's going to come, the flow of negative news that's coming. Today, again, we got a glimpse of it. And if I can, yes, so that's our GDP numbers that came out. Q1 GDP was negative 2025, but a lot of that is because of the imports and the effect of imports. When companies front ran the tariffs, they imported too much, even though it shows up as negative number here. That's because there was too much import, and imports negatively go into the formula for GDP. So it makes GDP look a lot worse than it is actually. Nevertheless, tariffs are supposed to slow the economy. I mean, that's an expected effect, and we still haven't really seen the real impact. Some other things that we expect to happen, I think if we go to our previous reports, we will see, where do I have? Yes. we will see some of the expectations we've had in the past was that as recession shocks ramp up, we should also see disinflation. And then today we see the PCE price, inflation goes down, core PCE goes down, which is the main metric that the Fed looks at. And again, for that, the reason for that is as recession fears ramp up, people just will pull back on spending and purchasing, and all of those things will put downward pressure on prices, no matter how much extra you pay for tariffs. So once that happens, you will get negative economic news. You will also get disinflation. Inflation goes away, GDP slows, then the conditions for Fed rate cuts are met. It's not likely to happen in May, so this coming event of the Fed FOMC is probably not going to include a rate cut, but the next one is pretty likely. So after May, in June, we should start getting all those rate cuts, and then negative effect of the tariffs will also be slowly priced in. And then towards the second half of the year, we should get a lot better news, a lot positive behavior in the market. And then hopefully once you read it, you feel a little bit better about, and definitely not panic about, all the damage that you will see in the social media. The other thing we mentioned is that Bitcoin is really doing great in this environment. It's doing fantastic, especially if you look at NASDAQ. It has been, first of all, when the markets crashed, Bitcoin and NASDAQ went down together. And if you've been following the market for some time, you know that Bitcoin is really expected and used to crash a lot heavier, a lot harder than NASDAQ. But it's only doing a one-to-one crash together with NASDAQ. So it looks like on the downside, it doesn't look riskier. But on the upside, as NASDAQ began recovering a little bit, Bitcoin rapidly recovered and almost closed the gap. So the Bitcoin NASDAQ ratio is almost back to where it was and has recovered all the damage. So it seems like Bitcoin, what it's doing is it is getting less hurt by the sell-off in the US assets, but it's getting more support as markets recover. And for that, again, in our piece, we explain some of the logic behind this. The idea is that most of the tariff-related sell-off is a loss of confidence in the US economy. And especially when global investors pull the money out and move to other assets, maybe local assets. I've heard a lot of Canadians, for example, repatriating their investment, then they will invest in local companies. Same thing happens in Europe, other places. So money is losing confidence in the US, but it's not losing confidence in Bitcoin because it's a global capital. So some of that money that is taken out actually ultimately ends up finding its way to Bitcoin and gold. And that's why these things are also going up. Yeah. So that's another positive event. Looks like in this environment, actually, Bitcoin is becoming more of, like, instead of a pure risk asset, it's becoming more of a combo of risk and safety. The safety part comes from the idea that if, say, China and US don't like each other and they want to start a capital war, they will hurt each other's economy. But in fact, some of the capital that's repatriated goes into Bitcoin. So Bitcoin actually becomes the more preferred asset in that environment. So that's a very interesting trend to watch. Gold is definitely doing that. So it got a huge bid during this whole chaos. It's near all-time highs. It has come off a little bit because geopolitical fears have gone down. And when that happens, actually Bitcoin catches up and surpasses gold. Okay, moving on. Just one final discussion about whether recession is coming. You could read this. Our idea is, as we've always said, tariffs are very, very hurtful for the economy. They are recessionary. They are a friction. When you do trade and you added friction in that trade, you slow down economy. So people say, oh, there is revenue generated for the government and that revenue could be given to companies. But the total revenue that's generated doesn't cover the reduction in economic activity. So overall, net, it's a loss for both sides, right? However, the other part of our thesis is you shouldn't also imagine a full disaster, because we explain our logic here. I'll be very quick. Again, you can read the full report, but one of them is this is a problem caused by one man. Okay, maybe a couple advisors behind him, but essentially one man. And that one man can't afford, politically, he can't afford a recession, and he can stop it. The moment he lifts tariffs and says, okay guys, we have to exempt many products, maybe we'll keep some tariffs here and there, a little bit on China and some other rogue actors here and there, but most important products will be exempted. The moment he does it, we are back to the same level and beyond, right? So he can fix it, and he can't afford a recession. So the moment we begin to actually have recessionary data points, I think he will pivot. And we've already seen many examples that he pivoted, right? The 90-day pause after the bond sell-off, and the other points that we are listing here are showing many examples where exemption of electronics from China. We will see more of this because they're not really making great progress on the deals, and they're getting a little bit desperate, like announcing deals are coming, nothing is really happening, like the other side doesn't confirm. So they're getting desperate, and I think over time they will see that deals are happening at a slower pace than tariffs are damaging the economy. So you have to back down a little bit. The only question is how can they do this politically nicely, right? So it doesn't look like a loss.